Welcome back to another fantastic episode. Today we have somebody that needs no introduction. Many of you people that watch the channel out there are going to know exactly who this is. We have Vandell, who is the co-founder of Black Swan Capitalist. Thank you for joining us today.
Appreciate it. Thank you for having me here, Jake. It's always good to see you.
Yeah, man. We've done a couple things in the past, and we always have a very aligned outlook on the long-term, way things are going to transpire here. But you're local, and so I thought, what would be a better way to kind of get together and talk about things rather than, Zoom like everybody else does. We just do it in person.
Yeah.
So I appreciate you coming in and making it happen.
Definitely. I'm happy to be here. Excited for the conversation too. So
I think it's going to be great. So, we take this a bunch of different ways, like we were talking about off camera, but I think just starting out, I have kind of a outlook where things may happen a little bit faster than other people. But I would love to get your purview of where you see we are in the macro, and then like how long you think things will take to play out for this transition that we're in.
Yeah, so that's, to be honest with you, that's a difficult question to answer, but I could still share with you my opinion, objectively speaking,
100%.
Where I think we are within this transition. So there are many ways to take it, but just to summarize it and keep it simple, throughout every historical technological revolution that has taken place, it goes through four distinct phases.
Mm-hmm.
So you have the eruption phase of the technology when it first emerges. And then you have a second phase, which comes later, and that is the frenzy phase.
The hype.
Yeah, the hype, the speculation, the interest, but not mainstream adoption. Eventually you have a turning point.
Mm-hmm.
And this turning point transitions you into the synergy phase. And the synergy phase is the third distinct phase of this technological revolution. And that synergy phase is when you really get investment, infrastructure, deployment, actual use cases at scale, global adoption. And then the fourth phase, finally, is the maturity phase. This is when the asymmetrical upside from an investment perspective is largely gone, compressed at this point. Growth is beginning to stagnate because adoption is already taking place. Now, where I see us within that transition, to put it into perspective, is we have already passed the eruption phase. This is, technically speaking, when Bitcoin was first came onto the scene, you could say, in 2009, and when XRP perhaps was in below 50 cents. Okay. Now we are still in that transition period, but we've moved on to the second distinct phase. And that is the frenzy phase. Yep. Yes, exactly. Now, during this phase that we're in, this is where so much of the asymmetric upside and opportunity still presents itself at the moment.
Okay.
But once we get through this phase, what I'm expecting is some turning point to take place, which is one of the components of this transition.
Okay, so it'll culminate to a turning point that then allows for the implementation or actual use of the technology.
Yeah, and we are clearly in this frenzy phase still because we don't have clear regulatory frameworks, okay, for the most part.
Yeah.
We don't have global mainstream adoption. We have utilization of the technology and some level of deployment, but it's not global yet. It's not mainstream at this point. And we still have plenty of speculation that is wild and crazy at the moment, from meme coins to people creating pump and dumps in their garage, So we're clearly in that frenzy phase. But once we get through this phase, we're going to see some recession, some clean out and wipe out of the space completely, which we have seen throughout previous historical technological revolutions. We saw this during the Telecommunications Act, the internet and tech bubble, and we're going to see the same thing play out with AI, robotics, and with blockchain technology and digital currencies, which is the crypto ecosystem. So we're going to see that again. Now, we haven't got to that point yet, but when we do, the ones that do survive are not only going to survive, but they're going to thrive.
Yeah.
And those would be the real winners. So that's where I see us in this transition right now. We are still heading towards that turning point where we're going to have to see some disruptiveness and cleanup of the entire space. And that's also going to present an opportunity within itself when it does happen. But what smart investors are doing today is they're not predicting future dates and times. They're positioning for the inevitable outcomes.
I would agree with that.
You know,
I actually very much largely agree with you. I think that there's going to be, I mean, there's 50,000 plus cryptos and blockchains and projects today. And as we see, you know, a consolidation in the space, I think that there will be maybe 3 to 5 networks that are kind of like, you know, the layers of the internet that were stacked on top of one another that allow that to function at scale the way that it does. And then there'll be other things that are built on top of that that we probably don't even really comprehend yet.
Mm-hmm.
So what do you think? I mean, could you pontificate on some of the catalysts that you think might end up being that turning point that would cause the consolidation?
Yeah, for sure. So one of them, and we have talked about this in the past before, and we agree on this largely for the most part, some sort of liquidity crisis. Okay. I think that's inevitable, and simply because the mechanics of the debt-based system. All right. This debt-based system has massive implications. One is currency debasement and inflation are baked into the equation from the get-go. The second implication is that because the system that we currently have today requires constant credit creation and debt expansion to keep the system functioning, when credit contracts, you get credit crises and liquidity crunches. So it's already built into the system simply because of the mechanics of the debt-based system. That's why historically, we always at some point get a financial crisis, and then the headline narrative arrives right on time, always to explain away something that was already in motion. And I think that's going to happen again. And what's interesting is we have already seen some of the signals, macro signals, that historically preceded every major recession and financial crisis. For example, the yield curve inversion. Historically, when it inverts and then reverts to the upside, people think, oh, that's the signal the recession's here. But no, it's actually when the reversion accelerates to the upside in the yield curve. That hasn't happened yet. It's been consolidating and ranging, but it's already gone through this inversion and reversion to the upside. And historically, every time that has happened, a recession, a financial crisis has followed. And the same thing applies with another interesting pattern that recently happened, and that's the oil spike. Every time we see an oil spike, it's just a matter of time before we have ran into some financial crisis or recession, met with some narrative to make sense of the situation for the public. That has happened as well. But so far, we haven't had the financial crisis. And what's interesting is that we're also in a midterm election year. And historically, Q2 and Q3, and especially the second half of the midterm election year, have historically been the weakest spots within the 4-year presidential cycle for the stock market, including the crypto market, since crypto ever came into the equation. So we have all these macro signals telling us that inevitably, on a balance of probabilities, there's a very high probability that some sort of event is coming, some catalyst, back to what we were saying. Now, it's very difficult to know what the catalyst will be, but I had Michael Howell, who's the godfather of global liquidity, on me and Versan's show at Black Swan Capitalists, and he said something very fascinating because he spent his time at Solomon Brothers, and this is his expertise.
Oh, wow.
He said every major financial crisis we had actually came from a funding and refinancing problem in the system.
Makes sense.
And that all goes back to the debt situation and refinancing the debt. And what's interesting, every time we had some financial crisis, interestingly, it always gave the Fed cover they needed to lower interest rates, refinance the debt, inject more liquidity into the system. So one of the implications of the debt-based system is that a liquidity crisis is inevitable, and it will always happen until the system eventually fully resets and we don't have to rely on refinancing the debt to keep it going. So far, we're still in that situation where refinancing the debt is a necessity at this point, because as we were talking about earlier, I mean, what options do they have? And they really don't have many. They got three. The first option is default. That's probably not going to happen in the traditional sense.
Correct.
The second option they have is to pay the debt. That's not going to happen for two reasons. First of all, they can't afford it. And second of all, the whole system and economy is based on debt. So if you cancel out the debt, the whole system collapses from an economic slowdown. The third option is roll it over and refinance it, but at the expense of the currency. So that's where we are in this situation. So I'm not sure what the catalyst is going to be, but all I know is for sure there's going to be some narrative and headline to cover up the real core issues that are going to cause the crisis. And the core issue will be a financial system or liquidity crisis like we saw in 2020, which started from the repo markets in 2019. It was actually a liquidity shortage. And then interestingly, right on time when they had to refinance the debt and inject liquidity into the system, we had the whole C19 event that just showed up on the scene out of nowhere. And what's interesting is that allowed them to achieve not just kill two birds with one stone, but it allowed them to kill 30 birds with one stone. So achieve multiple agendas simultaneously. That's where we are right now. Something is coming. We just don't know what it is. And the key is just positioning yourself and structuring your portfolio to position and benefit from either scenario that plays out so that you still maximize your upside,
but
you minimize your downside.
Yeah. So on that, nothing here is financial advice. It's only for entertainment and educational purposes. You should always speak with a financial advisor before making any investment decisions. And the opinions that I share are my opinions. They're not the opinions of Digital Ascension Group. I don't know about Vandell. I'm sure his opinions probably, are they your own or are they of the company as well?
They are of the company and me and Swan, my brother. Yes.
So, I mean, we could take this a bunch of different ways, but so I'd love to get into gold and silver. I know that you guys and myself are also proponent of those metals and the monetary system that would be backed by hard assets.
Yeah.
And then I'd love to touch on Tether as well, as far as like specifically for the crypto ecosystem. How do you see those playing together? And are they two separate pieces, or do you think that there'll be something that's involved there with Basel III and the restructuring of the financial system where both will be impacted?
So personally, I see Tether slowly fading from the equation as this core stablecoin over time. And I see that core place being taken by RLUSD.
Okay.
And if anything, Circle's stablecoin. USDC. Yeah, that's my opinion only. That's how I see it playing out. And there's multiple reasons that make me believe that. But I'll just touch on one. And this all goes back to the monetary authorities that actually love to telegraph and hide critical information in plain sight, buried within hundreds of pages of documents. And I think the real edge here is information asymmetry, but it only comes from if you know where to look and how to interpret that information.
100%.
And so what I'm about to say is simply my opinion based on factual data.
Yep.
So what's interesting is the Hoover Institution published a policy report, and this report came out in 2022.
Okay.
It was interesting because the report is called Digital Currencies, the US, China, and the World at a Crossroads. And interestingly, within the report, chapter 5, page 121, the report was co-authored by Kevin Warsh, who's the new Fed chair. Now, it was co-authored by Kevin Warsh in 2022, along with 30 other experts in the field and economists. Now, on that chapter 5, page 121, there's a very small section that says specifically discussing the mechanics and operational potential of an SDR, which is a special drawing rights, which is essentially, it's a supranational currency that the IMF, which is the International Monetary Fund, would basically issue as an IOU to central banks, as an emergency currency to central banks and countries that are in financial distress and hardship. And that's what was specifically discussed in there. Now, right below it, it says, like XRP and Ripple's payment ecosystem. So they were directly referencing XRP and Ripple's payment ecosystem when discussing a potential SDR, special drawing rights, base stablecoin. And what's interesting is in that section there, they could have mentioned any other cryptocurrency or stablecoin because, as you said, over 50,000 or a little less during that time, but they specifically mention XRP and Ripple's payment ecosystem, which suggests to us, back to interpreting things correctly, that they understand fundamentally and they have a very deep understanding of the operational mechanics behind liquidity, settlement, interoperable liquidity rails, different corridors, the operational mechanics behind these systems. That's what it suggests, that they understand that fundamentally, because it was not a casual mention. It was a mention as if they understood exactly what they're talking about, and they studied it, and they were referencing it for a reason. And that's the interesting thing. It's that a lot of the information is many times telegraphed and hidden in plain sight, but it leaves hints and clues to where, or to what they're thinking and where things potentially are going, most likely on a balance of probabilities. And that's how I'm looking at it. But what's interesting is this ties into other documentation that references and hints that XRP and even Stellar's foundation, their technology, XLM, will also play a crucial role when it comes to not only stable coins, but interoperability, liquidity, and settlement within the financial system that's currently transitioning. And they're going to play crucial roles in the new system as we get to the other side. And we're currently in that transition right now, but we haven't had that reset turning point as we spoke about earlier. So it's very fascinating, but I still believe Tether is going to slowly fade out of the equation from being this core stable coin to something that's just an alternative.
Yeah, I could for sure see that. It's interesting you bring up the special drawing right. So many people have talked about the ESDR.
Yeah.
And the SDR itself is kind of a basket of currencies, right? There's 6 or 7.
There's a few in there. I'm not sure how many.
I think they're weighted based on GDP of nations.
Okay.
So are you implying that XRP would sit as the special drawing right, or it would facilitate transfer of it, or it's just, is it backed by the special drawing right in some capacity?
Well, not Christine Lagarde, Georgia, who was the head of the, was it the Bank for International Settlements? She actually made it explicitly clear that the new Bretton Woods that we're going to go through at some point, which is inevitable, is going to have, they've made it very clear, we're going to need hard assets to back a lot of these sovereign currencies and these digital currencies. So, and that makes a lot of sense too, because currently we're transitioning from an economy built on physical trust to an economy that's going to be built on mathematical code that needs to be backed
by something,
by physical tangible assets, and that's where we're heading. And they've made it very clear. And that actually explains why, since 2008 going into 2009 and 10, central banks have been net buyers and accumulators of physical gold, despite the fact that ever since then the world has been moving towards more digital economy, and yet they were accumulating physical gold. I mean, if gold and tangible assets weren't going to play a critical role in the new system, then they would not be accumulating it. They'd be, if anything, they'd be accumulating Bitcoin, but they're not, okay? Or something else, So it's very obvious where this is headed.
I would agree. So currently we have free floating exchange rates based on the US dollar. After 1971 and we closed the gold window here in the US, we had revalued gold on the Fed's balance sheet up to like $42 per ounce, which today would be worth significantly more. They're supposed to audit Fort Knox and all of that. We'll see if that's going to take place or what they actually find there. To be able to stabilize this on a global scale, my thought, and I would love your opinion on this, is pegging things that aren't owned by sovereign nations. So instead of pegging to the US dollar through, a gold-backed mechanism like we did in 1944, I think that they may peg gold and oil in a specific ratio. Like you always be able to trade this much oil for this much gold and this much gold for this much oil. And then that would provide, because Canada doesn't have any gold. Right, they have gold in the ground. They're very mineral rich, so maybe that's a play that they could use to be able to tokenize the underlying assets inside of their landmass. But yeah, would love your thoughts on, like, in this new monetary system, we are absolutely going to have some stable backing. What's the mechanism by which they do that, do you think?
It's very difficult to know. I'll be honest with you. I would love to comment a bit more on that, but I don't think I have the necessary information to actually make a good judgment call on that. And I'm just being honest.
Yeah, that's fair.
So what I anticipate or see it, the way I see it playing out, is there would be some ratio backing of tangible assets and commodities as well to the currencies and to these digital assets. That's how I see it playing out.
So similar, like Russia's already kind of backed the ruble with gold, right?
Yeah.
They have so many grams per ruble that they've backed it with. Do you think the U.S. will do that through a proxy and then issue stable coins on top of it? So we've heard Judy Sheldon talk about the gold-backed treasury, right? And then people will be able to buy those gold-backed treasuries and issue stable coins that are a direct representation of them holding that debt that's backed by the gold. Do you think it'll be a layered approach like that? Or do you think it'll be more like what they've done in Russia?
I think it would be similar to what you just explained right now. And I could also, at the end of the day, if they don't have anything backing these new assets, then we're essentially
just recreating
the exact same system that we've already been in. And the what's actually happening is we're moving away from the current system. And things like that are going to be changed drastically. So that's definitely how I do see it playing out the way you just explained it. But it's hard to know because there's any way. It's just difficult to know. I can only speculate.
Well, like you said, you read a bunch of documentation and then you kind of think critically through those things. And you have a ton of fantastic people on your channel and what you guys do over there at Black Swan Capitalists. So just want to give you guys kudos to everything that y'all put together. But like you get to really have some really interesting conversations with people that might be in the know. So that's probably informed, some of the ways that you think about this. Would you say that's accurate?
To some extent, yeah. We've had some very smart people on the show, from BlackRock, Edward Dowd, Michael Howell. The list goes on. But what's interesting is when we talk to some of these people, sometimes, not all the time, there are just certain things they just don't want to say on YouTube or on social media. So we'll have the conversation afterwards. It's always interesting because sometimes they will say things that we weren't expecting, So
for sure. So I want to circle back to Tether. because for me, I think that that's the catalyst that allows the consolidation of this space. If we see the proliferation of other stable coins, RLUSD, maybe Ripple acquires Circle. That's a rumor that's been touted and
I wouldn't
floated
be
around out
surprised
there.
at all.
I wouldn't either.
I mean,
Uh,
yeah.
I don't think that they could have happened previous to now because we didn't, there was a rumor back in the day, maybe a couple years ago, that they had offered like $20 billion. And I heard
I
Brad
remember that.
Garlinghouse speak on stage and he said, oh, well, we didn't offer $20 billion.
They said it was a rumor.
Well, he didn't even say that it was a rumor. He said that we didn't offer that much money. So to me, that made it sound like, oh, they were looking for an acquisition, but they didn't offer that.
That was not the offer.
Yeah, yeah. You have to, people say things a
Read between the
specific
lines,
way. Yeah. But now that we have Paxos, we have PayPal, we have all of these other stablecoin issuers coming to market, I don't think it would be an antitrust situation, because I think that was what their concern may have been previously. If they were the main stablecoin issuer globally outside of Tether, then there's U.S. trust laws that they would be in violation of. So it'd be interesting to see if that transaction takes place and how much more market share they would have, because USDC is the second largest stablecoin globally. I think it's like close to 80 billion in liquidity today. RLUSD's not quite to 2 billion.
And it's only growing, especially because of the Genius Act.
Right. Well, they've now in the EU, because USDT doesn't meet the MiCA or MiCA standards, however you want to say it, they're delisting it from all the exchanges over there. Do you think that could cause a liquidity crunch for exchanges and crypto itself?
I think it could. I think it could put a drag on crypto, but I think it would be, in my opinion, I think that would be short-lived.
Okay. You think there's going to be enough other stablecoin issuance to come in and kind of fill the gap there from other counterparties?
I do. Yeah.
I mean,
that's my opinion, though.
Yeah.
But of course, anything could happen.
It's like $175 billion. There's been a small reduction in the market cap that they have during the down cycle that we're in. Yeah. If it was sudden, it would definitely be a problem.
That would be your theory play now.
Yeah, I have my, yeah, and then you would have, liquidity kind of move here. So do you think, you mentioned kind of later in the year that we would come to a market top for, the S&P and NASDAQ and some of these other larger exchanges?
There's, okay. So I'm looking at everything from a big picture perspective.
Long-term
macro,
cycles.
global landscape, global macro. Yes, exactly. And what's interesting is there are a few key catalysts that have already occurred, as I explained earlier, that have historically preceded financial crises and recessions. Now, those have already happened. So the oil spike, okay, and by the way, the oil spike was one. Second of all, the yield curve inverting, reverting, and then it has not accelerated steeply to the upside, but it's already went through this reversion and inversion part.
So you think that the long-term bonds should be priced higher or will be priced higher as far as like yield that they bear?
Yeah, I think it's going to go up. Okay. And then I think it's going to drop eventually again at some point. But the point I'm trying to make is that the macro warning signals that historically preceded financial crises and recessions have already occurred. So there's capitulation based on prices, and then there's time. So time alone can run its course and eventually be the catalyst itself.
I would agree with that.
Oh, yeah, that's how the cycles work. So right now, we have a window still between now and the end of the year. And of course, anything can happen between now and then. But also, there was other events that took place from a monetary policy perspective that historically preceded financial crises. And that was actually the rate cuts when they first started. Okay, they started in 2025. And then what's interesting is if you look back on a historical chart, when we started the rate cuts in 2000, going into 2001, 6 to 9 months later, you had a financial crisis, or you had the crisis, the dot-com bubble and all this. 2007, that's when they started cutting rates. 6 to 9 months later, we had the credit crisis and the housing market meltdown. And then 2025, they start cutting interest rates.
Yeah.
6 to 9 months later, that takes us between March and July sometime. It's interesting how it just plays out. Now, these historical patterns, they tend to repeat all the time, you know, and I know, I get it. It's people always going to say this time it's different. And the thing is, there are always going to be certain things that are different within the grand scheme of things. And but the theme is the same. Okay, it's the details that are different.
Yeah, they say that history doesn't repeat, but it often rhymes.
Mark Twain? Yeah. So, I mean, I do expect something to happen. I expect the stock market to top sometime between now and the end of the year. And I expect that topping in the stock market to have a drag on crypto. As a matter of fact, I use something for my market cycles and analysis called stage analysis. And right now, the entire crypto market is in a stage 4 of its entire cycle. Stage 4 means it's in a declining phase. Even though we might get relief rallies to the upside, we're still in a declining phase of the cycle at the moment. And we still have between now and the end of the year, which we could see a price capitulation with some sell-off event that takes place, risk-off event, or if we get to the end of the year and prices are still consolidating the way they are, by the time we get into Q1 2027, if prices are still just consolidating as they are now, that means this was the bottom.
Right.
That's what that means. You know, so we still have time. But I do expect something to happen in the stock market because I think it's overextended, and regression to the mean is one of the most powerful laws in financial physics. You know,
I would agree with you. You think so? We've got a couple more IPOs that are going to happen here. We've got
the best exit liquidity strategy in the game. Like, I know it.
We just had SpaceX, which is rocking and rolling.
It is rocking and rolling.
And now we're going to have OpenAI and Anthropic here in the not too distant future too. So I think as of today, you know, we're recording this on the 16th of June. SpaceX has become like the 4th largest company in the world, surpassing both Amazon and Microsoft today.
Yeah, I saw that.
Which is wild to see.
Yeah.
Do you think these other ones are going to time the market well? Do you think, I mean, you said between now and the end of the year. So, I mean, it could be a wide variety of outcomes here.
Yeah, for sure. Yeah.
David Hunter has continued to up his projections, great macroeconomist.
Yes, yeah.
And he thinks we're headed for 10,000 for the top of the S&P. And when I looked at the fear and greed index in the stock market, we were at like 38. So we're technically still in fear.
Yeah. So we have a lot of room to go.
Right. It still feels kind of euphoric to me, but apparently the sentiment in the market is different. So maybe he's correct. Maybe we see some substantial upside between now and the end of the year. Do midterms play? You mentioned that in your thesis earlier on around like that tends to be the worst performing year out of the 4-year cycle for the presidency.
It does. And that's not only for the stock market, but for crypto as well. Ever since crypto came into the equation in 2009, it affects crypto as well. It's been the worst year for the crypto markets within the 4-year cycle. And the best year actually has been the presidential year,
year,
going to the election. Yeah, which makes sense. So, yeah, but we're currently in the stock market. We are living through the melt up, blow off top phase. This is it. It just hasn't blown off yet.
Yeah.
All right. But it's still melting up. So it could be overextended, and that's what markets tend to do. You know, that's
people
what
are emotional.
Yeah. And all financial markets, including crypto, the stock market, they are just an expression of human psychology for the most part.
I agree.
And driven by liquidity. So as long as people are feeling, you know, fine and everything's good, and the headlines are telling you everything's fantastic, even though they're really not. I know they're cooking the books. I look at the data.
Yep.
People are going to feel that positive sentiment and emotion in there, and confident, you know. But you also have the Fed participating too in the stock market. Okay. So, I mean, this can be overextended for months to go from now, or even longer.
What do they say? The markets can be irrational longer than you can stay solvent.
Yeah, and I'm sure we're going to see that. Very soon. You just have to be able to identify extremes in the market. Okay. And this is clearly an extreme. So if you're a trader, yeah, ride the trend until it becomes unreasonable to do so. If you're a position trader, a investor, you can still do that as well. But if you're trying to enter the market at this point and you're thinking, okay, this is my entry point for the next couple of years, decade from now, this is the worst time to get involved.
Yeah.
Unless you have a risk management plan.
Correct.
Yeah, because we are at the heights of the market, and of course it can continue, and I expect that to happen. As David Hunter says, I agree with his analysis.
So you think 10,000 for the S&P is, I mean, that would be a euphoric blowout top for sure.
It would. I don't have any specific figures in mind, but I could see it passing 85, getting to 9,000, and within that range. Yeah, I could see that.
For the midterms, that'd be great, right? That would invoke a lot of confidence for the Republicans and being able to retain their positions through that. Voting
they
period.
want to stay in office and get reelected. So even if there is some sort of risk-off event or cool down during or leading up to the November midterm elections or right after it, I believe it would be a V-shaped recovery.
I do too.
That's how I anticipate this playing out. And but once we do have a cool off in the market, and it's inevitable because nothing goes up in a straight line, I expect that to drag crypto down as well, simply because the correlation is strong and it's very liquidity sensitive.
How do you describe the discrepancy we're seeing in the stock market from crypto right now?
Oh yeah.
Because the markets are up and to the right and doing very well, and crypto's down.
Yeah, it's a very simple explanation.
Okay.
So all assets and asset classes can be at different stages of their cycle at the same time, simultaneously. Now, as you get later in the credit cycle, what's interesting is the highest risk, most volatile assets tend to sell off first. And that's why crypto, the institutions, whales that are participating in this market, holding it up really, they decided to de-risk and take chips off the table because they notice overextension in the market. And this is when Bitcoin hit its all-time high in October and then into July as well.
Yep.
Okay, so that's a de-risking. It's just prudent risk management. Okay. So we see that sell-off and that selling pressure actually take place first in the crypto market because it's the highest beta asset out of all asset classes. So that sold off first. And what's interesting is you had commodities, energy performing very well. And that's actually typical at the later stages of a credit cycle as well.
Okay.
So that's actually a very repeated pattern that we see throughout credit cycles. And so the point I'm making is that different asset classes can be at different stages in their cycle. But from an investment perspective, that actually is a good thing because what it means is the next path of least resistance for crypto is eventually higher once we get through this trough and capitulation phase.
Do you think there'll be a rotation out of stocks into crypto? Is that the way that the liquidity is going to go as there's a sell-off there? Crypto's going to go?
I don't think it would be a very, very tight timing relationship right there. But I do see that rotation shifting, and I'll explain why. And this is very important for people to understand, and this is based on my due diligence and analysis overlaying the charts. So altcoin season, people have heard about this term. It's just a major rally and outperformance in the crypto market. What's interesting is I overlaid interest rates, the Fed funds rates, with every crypto altcoin season we had and every major cycle. What's interesting is every major rally that took place, altcoin season, in the crypto market, with XRP outperforming 500% move, that happened when interest rates were below 2% every single time. So The reason we didn't get an altcoin season or massive expansion in the crypto market is simply because rates have been elevated since 2022. Now that Jerome Powell has destroyed the economy and done his job, he's passing it on to Kevin Warsh, who's a crisis management expert because he served as a Fed governor from 2006 to 2011, and he actually helped bail out AIG and Wall Street. He actually participated in creating the response, the emergency response in 2008. And now he's coming back into the picture, taking this stuff off Jerome Powell's plate. So, yeah. So what's interesting is the outperformance of crypto is still my long-term thesis. I still see that happening, especially utility digital assets that have institutional interest and backing.
I wholeheartedly agree. So how aggressive do you think he's going to be in lowering interest rates? Or do you think he's going to lower interest rates?
Yeah, I do. I think he's going to cut them to zero. Yeah.
Like just from 5 to, or do you think there's going to be some pit stops along the way?
Well, the Fed's fund right now, 3.75, something like that. So there could be, it could be a gradual cut, but I do see a emergency pivot coming. Simply because all the macro warning signals I showed you, they have historically preceded financial crises. And actually in 2026 alone, between now and the end of the year, we have approximately $8 to $10 trillion in treasury debt that has to be refinanced. And they cannot do it sustainably at these elevated rates. And is it a coincidence that all these problems that preceded financial crises already happened? I mean, come on, it's like a movie script we're watching here, you know? So that's how I'm looking at it. And I'm looking at it objectively. You know, I'm not taking any biased perspective. This is objective. I'm just looking at the data and historical patterns because I think it's going to play out the same way it has in the past, you know? And this guy is going to cut rates because he'll be forced to.
So do you think the reaction from the Fed is going to be proactive this time or reactive?
Reactive.
Okay.
Yeah.
Just as it has been in the past.
It's always they're always reactive, but that's by design. I mean, I'm pretty sure they understand the operational mechanics of the system. And if they wanted to prevent something, they could. But when there's a financial crisis due to a funding or refinancing mechanism,
it gives them the opportunity
to restructure their buddies on Wall Street, to consolidate wealth, buy assets at pennies on the dollar. It allows them to achieve multiple agendas simultaneously. And so that, I mean, they're going to have to cut rates aggressively. Because they got refinanced the debt. The interest is growing exponentially and it's just unsustainable at this point. And the bill is coming due.
Right.
So they're going to have to cut rates aggressively. This will give them cover, and whatever story they want to give the public at the time will also give them more cover to inject liquidity into the system. And what's interesting is that for the amount of debt that has to be refinanced, I learned this from Michael Howell, there has to be an equivalent amount of liquidity in the system for the amount of debt that has to be refinanced. So as the debt is increasing, the more debt that has to be refinanced, there has to be more liquidity in a balanced ratio to refinance the debt.
I've heard Warsh speak in an interview, and he talked about being able to lower M2 money supply while lowering interest rates. So that would kind of be juxtaposed to what you just mentioned there, right?
Yeah, but what's interesting is that's the thing. He said that, yes, but I don't believe or take anything they say at face value, because Jerome Powell also said he was going to hold rates high. And then we had the C19 event that came out of nowhere because of the liquidity crisis.
Then he had an excuse.
There was an excuse. Now he had a story, you know, and it was an emergency measure that had to be taken. So we're going to see monetary policy pivot to extremes. And one universal timeless phenomenon is that pretty much everything in the universe is cyclical for the most part.
I would agree.
And that includes not just human emotions going from one extreme to the other, or assets going from one side to the other, one extreme to the other, but that includes everything from your biology, your cells, the weather, life cycles, and policy, the credit cycles. They jack up rates. They lower interest rates. They expand the money supply. They contract the money supply. They go from one extreme of conventional tools to the other. And we're going to see that cyclicality play out in monetary policy as well. They will go from one extreme to the other. And you're going to see that reflected in the financial markets too.
Yeah.
So everything is cyclical. So just because they're saying they're not going to do something, or they're just going to keep things steady the way they are, does not necessarily mean that that's going to be the case indefinitely.
Could he use a function of the bank? So let's say we do see, a huge Cambrian explosion.
The private market?
Well, the stablecoin issuance.
Yeah.
Right. So they could reduce M2 money supply on their side, but we could have more stablecoins being issued by the banks to be able to provide that additional liquidity. You think that may be a mechanism where they could expand the money supply like you were talking about, and also lower interest rates, but look like they're lowering the M2 money supply?
Yeah, they're definitely going to orchestrate some exotic gymnastics, financial gymnastics over there. I wouldn't be surprised. But at the end of the day, I mean, I'm looking at it objectively, and I'm looking at the fundamentals and the debt. And the current situation is there is no way out of this corner without injecting more liquidity into the system to refinance the debt at the expense of the currency. And if the bond market has any problems, which usually happen during periods like this, they will sacrifice the currency to save the bond market. Okay.
Yeah.
And I anticipate that to play out the same way. And the Genius Act just gave them some cushion for a period. That's really what it is for now, for this transition to play out. Because now they have demand for treasuries.
Correct. So they currently have like two levers that they can pull. They can play with interest rates, or they can adjust the money supply. And both of those are kind of proxies to be able to incentivize certain behavior in the economy.
Yeah.
Do you think that they're going to potentially have a third lever with, I don't know that this will be here in the US, but with CBDCs? You could actually affect the velocity of money by incentivizing people to spend money within a certain duration, or you could more directly affect behavior if they had that monetary tool. Do you think that, I don't know that the US is going to have that, but other jurisdictions, do you think that'll play out?
Yeah, I mean, approximately a little over 80% of all central banks are already have done the research and development on central bank digital currencies. And I mean, if you want to call it stable coins, central bank digital currencies, at the end of the day, if you move the veil,
it's programmable
the mechanics are the same. Okay.
Yeah.
So it doesn't matter what they label it as or repackage it as. At the end of the day, that is the destination. And in that document I shared from the Hoover Institution, co-authored by Kevin Warsh, they have countless sections in there discussing smart cities, stable coins, CBDCs. I mean, that's the agenda here.
Yep.
Okay, that is the direction we're going. And the truth is this: you can either see it for what it is objectively and put yourself in a position of power to give yourself optionality and prepare for the inevitable, and give yourself some level of protection and support, because that's where it's heading. Or you could just sit back and ignore it and fall further down the food chain and have to rely to an enormous extent on these
bureaucrats in the government.
Yes, that are coming. At the end of the day, I mean, that is the direction we're heading. So we're all going to be in the same cage. Okay, that's the truth. But you could be the guy in there, or the woman that can go to the restroom when you want, eat when you want, go to the basketball court in this prison and have that freedom. Or you could be the person that's stuck in the confined cell in the prison. But we're all going to be in the prison. Some are going to have more optionality and freedom and wealth and flexibility.
I would argue that we already are. The debt-based system that we exist in and the confines in which you have to participate, there's rules to the game. And I think what you're saying is, if you understand the rules to how this system works, then you can leverage those to your advantage.
Agreed.
But if you're ignorant to the rules at all, then you're just, you succumb to those circumstances, and then you're upset about it because you don't know how to play the game. And I think you guys do a fantastic job of explaining all the rules and how this stuff works, so that the average person can use that to their advantage and at least have some optionality, or, position themselves well moving forward. It'll be interesting. The last thing I wanted to touch on with you is just AI and how that's going to work with blockchain, with this total global, transition that we're going through. Do you think that there's part of my thesis is they've pushed up the M2 money supply and done the things that they've done because they knew a deflationary collapse would happen if they had not. With the implementation of blockchain and AI and these other progressive technologies, you should see significant cost reductions in the production of goods and efficiencies created in the economy that would then reduce, prices across the board, assets as a whole. Do you think that there's any credibility to that, or do you view that completely separate?
Yeah, I view that. I think it's going to have a deflationary effect. Same thing like when oil prices spike, people think, oh, that's inflationary. Yeah, momentarily.
Right.
Maybe it would be inflationary in 2 or 3 prints in the CPI data, but ultimately it's deflationary, because if you raise energy prices, now people won't spend in the economy because that money's going towards that. Now, the same concept applies to all these innovative technologies, okay? AI, robotics, all of that. It's deflationary down the road, but who knows how long that will take to actually see that in effect. Now, the other part to that is, at the end of the day, it's all about the currency. Okay, if you're devaluing the currency debasement, which is what's happening now and going to continue to happen, then the question is, which one is going to be the stronger force here? The deflationary effect or the currency debasement? Because in my opinion, I think to keep this system going, they're going to have to expand the balance sheet by trillions and trillions of dollars and debase the currency to an enormous extent just to keep it going. But at some point, there will be a critical transition point where they will have to introduce a new currency system. So far, the idea is there's research, development, it's being built in the background, but we're still using the same system, the same currency. But at some point, that's going to change, because historically, every currency, every empire, and every government has collapsed at some point and has to be reset. So I see that coming. Yeah,
I would agree with you. And I think we're at that point, right? So once our debt reaches a certain level of GDP and our growth, then it becomes untenable to continue to be able to service the interest on that, which is exactly what you're talking about.
Yeah.
So they normally will devalue the currency, because then you're paying back that debt with, currency that's less valuable than it was before. But to your point, I think that we're going to move to an asset-backed system. So it'd be interesting to see the transition here, because they're going to have to reinstate trust. At this point, people are well aware of the debasement of the currency. I mean, you're seeing it at the grocery store, the inflation in home prices, and your ability to be able to purchase things compared to what it was just 10 years ago. Most people are having to work a couple jobs just to be able to survive at this point. So, in order to prevent a revolution, there's going to have to be some change here.
Yeah, they will probably allow things to get overextended, but they won't let it be like that for too long, because they wouldn't be able to restore law and order. So they might squeeze as much juice out of this can as long as they can until something breaks, and then they will react. But they already have the solutions for the new system. It's there, but they know that they could keep this going for longer. They know that, because
Peter Schiff has been talking about this for 26 years, maybe even longer than that.
The way I look at it is, I studied I devoted a lot of time to understanding monetary resets. And what I found is all monetary resets throughout history happen in a sequence with 3 things happening.
Okay.
The currency, they start from a debt problem. So too much debt in the system.
Financing things, expanding your economy.
Expanding the debt too much. Second, that led to currency debasement and very high inflation. And then third, you had revolutions and riots. Now, that third part of the sequence is when the reset actually happens. So far, we're not even in hyperinflation yet. Okay. This water bottle still costs like a dollar, you know? So we're heading that direction, but it hasn't happened yet.
Yeah, we're not in the Weimar
But
Republic.
people are starting to feel it. Yeah, exactly.
You don't have wheelbarrows of cash to buy a loaf of bread yet.
But we're heading in that direction. I mean, that's inevitable. We're going to hyperinflation if something doesn't change eventually. Yeah. But there's still juice in the can, basically, is what I'm saying.
Well, this has been great, man. I think that people are going to find this really compelling. If people want to learn more about what you guys do over there at Black Swan Capitalist, where can they reach out or where can they find you guys?
Yeah, thank you, Jake. I'm on Twitter. I'm on X. My brother is on Twitter and X. We both have 2 YouTube channels, Black Swan Capitalist, and then my personal YouTube channel is Vandell Aljarrah on YouTube. Yeah.
Well, thank you again for coming in and taking the time for the conversation.
It's been a pleasure.
You know, it's always great to chat about this and get your perspective on things because, you know, I think we very much agree on the long-term outcome, how we get there, you know, and I'm okay either way. I think we both are, as long as the long-term outcome, we get a revaluation and certain digital assets do exceptionally well. I think a lot of the people that watch both of our content and ourselves are going to do really well.
I believe so.
Things as they transition.
Indeed, I believe so. Yeah.
Well, thanks again for watching. Hopefully you enjoyed it. Please like, subscribe, share, do all the fun stuff, hype it if you feel compelled, and we'll see you on the next one.